Welcome to the Crypto Mining Morning Show every Monday through Friday, 9:45 a.m. to 10:45 a.m. Central Standard Time, provided I haven't been up late working on something for the channel. Typically, that's pretty much how it goes. So today we're going to be covering a couple new releases for miners. We have a new release from Team Red Miner as well as Team Black Miner, but they release new releases all the time. So Team Black Miner, not that big of a deal. We're going to be talking about a chain split that happened yesterday on Flux. Now, this one I don't have a ton of information on because there's not a lot of articles. I'm just going to be covering it to the best of my ability, but I do have an interview with the developer of Flux, the lead developer, at 3 p.m. Central Time today. So hopefully that'll be out this evening and we'll get more information. It was going to be over different stuff, but obviously with the current chain split and everything that took place there, we're primarily going to be covering that. Then, of course, we're going to talk about declining GPU prices along with the declining crypto mining profits. I'm going to give you guys a little bit of insight on what I'm thinking here. You know, not financial advice, that sort of thing, just what I'm seeing, previous experience with other cycles when I see possible recovery and that sort of thing. It's not going to be pretty. A lot of people are going to get upset with what I think is going to happen, and that's just the way it is. But I like to look at these things as practical as possible and prepare for the worst. So let's get into it right after a word from today's sponsor. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. All right, welcome back. Let's go ahead and cover the changes for Team Red Miner. This is version 0.9.1, released 3 days ago. I guess we missed it, but here we go. There's a follow-up FPGA release with added devices and voltage tuning support. The next release will have a stronger focus on GPUs. So if you're an FPGA miner, which maybe more of us get to be now, hey, maybe we can actually start finding FPGAs for sale. That would be cool. But if you are, here's some information. Updated FPGA guide text with new devices, voltage tuning, and more. Added 050C/ECU50 FPGA support. Added custom SC firmware for C1100 and U50C. Added TRM-SC firmware programming support. See FPGA update FW. Added voltage control for C1100 and U50C using new firmware. Added support for additional FK33 sensors. Added support for DNAs in the FPGA devices option. Added FPGA allow unsafe option for disabling safety limits. Added timeout for ETH hash DAG gen on FPGAs. And added the ETH ignore abort fail to disable intensity adjustment due to failed aborts. Added better handling of dead GPU logging in corner cases that previously didn't mention a specific GPU. So there you go. There's the updates for all of the new highlights, at least for FPGAs on Team Red Miner. Let's take a look at Team Black Miner. They released version 1.45 3 hours ago. They fixed CUDA stats in mixed card rig and missing stats in AMD on Linux. Fixed a bug in the light hash rate detector. Sometimes the program didn't detect correctly. I feel like this has been one of their changes on every single release, but that's okay. Fix AMD rig fail to start issue on Linux from 1.4.4 and improved default setting for light hash rate mode. So there's all of your minor updates for Monday, I guess. What is this? January 24th, 2022. And let's talk about Flux. So yesterday, essentially, I was on a hike, but the kiddo went and used the restroom. I was browsing through Twitter. I saw a post very early on. It only had like 2 or 3 likes from 2 miners, and they basically said Flux was experiencing a chain split And pretty much Flux network as a whole was down, I think, at the end of the day. And we have a couple updates, but nothing really that solid. So if we take a look at their Twitter, what we have here, which was released at 1:28 a.m. this morning, Flux node operators, all infrastructure of Flux is fully operational is what they said. Make sure you update your node to 5.2.0 of the Flux daemon. In case it's not syncing, restart it. And then they say, thanks for your support. So essentially what we experienced was, to the best of my knowledge, from what I've gathered on Twitter so far, like I said, hopefully I'll get some more answers later today. What was experienced essentially was a bug that was left over from Zell, and that came over and then was exposed. It caused a chain split, I guess, at this point, and took all the nodes offline essentially. Usually when that happens, you'll have some nodes that are still online and some that are off. So it really just depended. I believe it happened actually during the Red Panda Mining live stream as well. So I think he had maybe covered a little bit of it yesterday, but I did not get a chance to fully watch that live stream. What you need to know right now is that not everything's fully functional. And what has to happen is the mining pools all have to update. And even though if we go over to the mining pool stats here, we see a lot of them showing updated and functioning. Look, there's still all these that aren't. I do know for a fact that miner pool is not functioning right now fully. And that's just through people tweeting at me and stuff going on. So right now, if you're just trying to make profit for the day, which is going to be paramount, especially in a market right now like it is, you may want to consider just giving Flux a little bit more time to get settled, all the mining pools to get their nodes updated and everything functioning. Now, this is a huge disappointment to me just personally, and so this is personal opinion, because essentially with ETH moving proof of stake, I've been looking for a lot of different options. I've been really fascinated with Flux as of late. I deployed Minecraft to it via the Flux app stuff. We have a guide up on my Substack that I just started that you can watch there or read there if you want to do it yourself. I will be working on a video guide for that as well, obviously once things have settled down, because clearly this isn't functioning fully as it currently sits. And part of that disappointment is that, it couldn't like realistically handle all the hash coming off of ETH, but it was an option, and it was probably one of the best options if we're looking for longevity. And longevity is going to be super important because this has all happened before. Okay, so what we're experiencing right now, we can literally look back at history and the super cycles, and we can start kind of drawing parallels. Okay, and so today we're going to be talking about parallels, similarities between the previous cycle and this cycle, things to look out for, and so on. But the number one thing that happens is that pretty much all of the coins go away. And what that means is that the likelihood of the mineable GPU coins that are an option outside of Ethereum right now tend to just disappear. Development stops because they're not making as much money. People are disenchanted with the project and they stop supporting the projects. This is what happens. And so if you look at like what coins were around on the previous cycle and what coins are still around right now, there's not very many left over, right? It had looked like Ryo was going to continue, which was a good mineable coin, but that one went away. We don't have any development on that right now. We're going to go through the list and kind of maybe look and see what's going to stick around and what's not going to stick around, but expect the majority of them in circumstances like we are in right now to go away before the next bull run. That's what I would set my expectation at as of right now. Once again, not financial advice, just previous cycle support and how I am going to be approaching this. Let's go ahead and get into the market crash. Okay, so This is coming from CoinDesk. Bitcoin drops to 6-month low. Ether eyes bearish cross as U.S. stock index futures erase early gains. Bitcoin and Ether fell to their lowest level since July after Goldman Sachs predicted a faster pace of Fed tightening. Bitcoin, Ether, and the broader crypto market faced another wave of selling during Monday's European hours as U.S. stock index futures erased early gains, signaling an extension of last week's risk declines. Bitcoin fell to 33,600, the lowest level since July 24th, even as technical indicators signaled oversold conditions. The leading cryptocurrency has declined 27% this month and is struggling to find a price floor, with whales or large investors staying on the sidelines. Ether, the second largest cryptocurrency, the second largest cryptocurrency, slid 10% to 2,270, the lowest since July 28th, according to CoinDesk data. The native token of Ethereum's blockchain has lost 38% this month. Ether could soon see a Bitcoin-like death cross, a bearish cross of 50 and a 200-day moving averages. Bitcoin has dropped over 10,000 since confirmation of the negative crossover earlier this month. Other prominent coins like Solana, Cardano, and Polkadot have fell 12 to 15%. The latest round of sell-offs come after Goldman Sachs predicted a faster pace of Fed tightening if inflation continues to rise. The heightened geopolitical tensions between U.S. and Russia could be adding to bearish pressures around risk assets in general. Quote, we see a risk that the Federal Open Market Committee will want to take some tightening action at every meeting until the inflation picture changes, Goldman economist Dave Marisol noted in Saturday's client note, according to CNBC. The investment bank has penciled in 4/4 percentage point rate hikes for this year. Fed fund futures are priced for nearly 5 rate increases. Most commentators have tipped the first increase in borrowing rates in March, followed by 3 more at subsequent quarterly meetings. The ultra-hawkish expectations perhaps leave the door open for a relief rally if the central bank disappoints market expectations later this week by sticking to its December projection of 3 rate hikes in 2022. The Fed's January policy meeting is due to start on Tuesday, and the statement interest rate projections will be published on Wednesday. So if we're going to see a recovery, just like in general in the crypto market, I think it's going to happen, obviously, like sometime between like this Wednesday and Friday. Somewhere in between there is when we'll see how this is going to play out. Traditionally, if we're looking at a super cycle, most of the time I would have expected the bear market to hit in February, probably like a peak in February, and then we would basically have a decline through March, and then we would go into the bear market until the next Bitcoin halving. What we are seeing now is possibly something starting sooner. You can't ever predict exact times and dates or anything along those lines. We can get an overall picture, though, if we look at the past. So that's kind of what I'm doing. If we look at the past and you guys want the worst case scenario as I see it, I'm going to give it to you. And then we'll get all the comments of FUD and blah, blah, blah. But I think it's important that as one of the few cryptocurrency YouTubers that seems to really care about making sure we're as transparent and honest as possible, I'm going to tell you guys what I feel, what I see, and then how I think this is going to play out. And I could be wrong. I've been wrong a lot in my life. The good news is that I usually try again. So let's go ahead and just think about this in general. And I'm going to take a sip from Gamer Sups. Make sure you guys go get your Bitcoin shaker. Hey, oop, turned it the wrong way. The lid's not right. Here we go. All right. So if we look at previous cycles, what happens in a bear market is essentially, like I said, one of the big things already is most of the altcoins go away. Most of them just disappear into thin air. So be very, very careful with keeping anything in any sort of altcoins unless you are very, very strongly a part of the community, being in the discords, communicating with the developers, making sure that development's actually being done, all of this sort of thing. We're going to see in the next cycle, just like we saw this cycle, a whole bunch of coins that have roadmaps that have had nothing done on them since 2018. That's just the way it goes, okay? And that's how it'll happen again in this case. So first of all, what I would do, or what I am doing, is pulling everything out of all of the altcoins that I don't see a future in or am not strongly tied to. Some that I'm staying tied to just because I think that they have a future and I want to stay in and see what the development teams are going to be doing, is like Flux. Part of that also is because I'm actually deploying apps on Flux, so I need some Flux to pay for the apps that I'm deploying on Flux. Not so much necessarily an investment strategy, purely just, which is good news, having fun utilizing something. There's also Ergo, but that's very shaky ground right now, especially with the EIP 27 kind of up in the air. GetBlock has deployed their voting mechanism, allowing individual miners to go ahead and vote. Obviously, that parallel to Bitcoin from Ergo, which Ergo has kind of copied, where the miners are making the votes and the decisions for the changes of the network, is very positive. So that one I'm going to keep an eye on, that sort of thing, right? Am I going to keep a ton of holdings in there? No, most of my holdings are going to be in, well, Bitcoin at this point, because do I trust Ethereum to continue on? Well, if we're going to hit a bear market and then Ethereum's going to make the biggest consensus mechanism change in all of cryptocurrency history in June, I ain't willing to put all my chips in that boat. I'm just saying, I'm not willing to do it, okay? The timing couldn't be worse, and I just don't think that it's going to be a good idea to leverage heavily into Ethereum. Now, I understand people are going to argue with me and say, like, obviously, the price is going to pump due to a successful move to proof of stake. That's possible. But the price could also dump due to an unsuccessful move to proof of stake, okay? It's just as likely, okay? And I would rather be stuck in something like Bitcoin that has just better security, better fundamentals, than be stuck in something that's shifting very drastically during a potential bear market. And that's how I feel about it. So we're going to do something that we don't normally do. We've done it a couple times to just like give the overall view of how halvings work, etc. And we're going to do it again. I'll give you guys my Bitcoin and Ethereum price predictions right now, okay? This is not financial advice. I could be incorrect, but if we're basing it off of purely previous cycles, we're not basing this off of things that are happening right now, because obviously there are other external factors that need to be taken into account, some of which would be larger institutional investing. We got Intel investing into Bitcoin ASICs and building foundries stateside. A little note about that. If you notice when they are going to complete their manufacturing in Ohio and potentially release their ASIC miners, it lines up very conveniently with the next super cycle. And we'll explain that too. What are we looking at in the next couple months? More than likely, at least from my perspective, we are looking at going down further through March. In March, I would assume some sort of bottom floor. What is the bottom floor that I would see here? Well, if I look at just looking at previous super cycles, typically what you see is the bottom being the last super cycle's all-time highs. So what was the last super cycle's all-time highs? Well, for Bitcoin, it was 21,000. And for Ethereum, I want to say it was 1,100. I believe it was 1,100. So where do we end up in March? I think we end up with Bitcoin being around 21,000 and Ethereum being at 1,100, and then everything settling out until the next Bitcoin halving. When's the next Bitcoin halving, you may ask? Well, I do have that pulled up. here for you. We do have a countdown for that. And it's going to be 866 days, 1 hour, 33 minutes, and 47 seconds. So if we follow previous cycles, etc., we can expect the crypto market to remain, after the dump is complete, right? Whatever we hit there, we can expect cryptocurrency to remain pretty dormant until a couple years from now, right? 866 days. External factors. Once again, we were already talking about these inflation rates going up by a whole percentage point over 2022. We are also talking about GPU shortages. Still, silicon shortages are still going to be a thing, and we're going to talk about that too, because we are seeing some price alleviation within the GPU market. We have large institutional investors. However, like I said, in the case of Intel, really they're timed to launch. From what it looks like, their factory as well as the ASIC releases are looking to be timed perfectly with the next bull run. That's what it's looking like. So let's go ahead and talk about GPU pricing. Okay. This is coming from videocards.com. NVIDIA Ampere and AMD RDNA 2 cards slowly becoming cheaper. I already started screaming this from the rooftops last week. I said, pause your buying. A lot of people kind of misunderstood. They were like, oh, you're just going to stop. No, it's not smart when you see decreased pricing coming in to still be purchasing the same thing that you can purchase in 2 weeks for a lot less. Okay. That's why. And right now, if we're going into a bear market, we need, if we are, which it feels like, we need to make sure that we are making the most beneficial purchases for mining hardware that we possibly can so that we can survive it. If you can survive this and make it through and accumulate hardware, then you're going to be that much better off in 866 days, right? All right. AMD RX 6000 and GeForce RTX 30 prices are declining. This trend has been observed for the second time this month. From 185% GeForce RTX 30 cards are now only 177% more expensive than they should be. Meanwhile, AMD cards observe a reduction from 178% to 167%, which is a retail price increase over the official MSRP. Those price changes are likely not yet affected by the crypto coin crash that took place last week. For those to take effect, we probably have to wait a week or two. I want to make something extremely clear, as I got beat up in comments and beat up on Twitter over last week. I think it was Thursday, telling everybody to wait how long? 2 weeks. Okay. I just want to make that clear. This isn't coming from nowhere. I'm getting the information and I'm trying to provide it to you guys even a little ahead of time. One of the most popular coins for crypto mining on GPUs, Ethereum, has just marked its lowest value since August. This, combined with the upcoming proof of stake update in June, means that all new purchases of graphics cards may not see the return of investment by that time. It will now take years, not months, to generate enough revenue from mining to pay off the graphics cards. Furthermore, AMD and NVIDIA have finally launched entry-level GPUs such as the Radeon RX 6500 XT. Don't buy that if you're a gamer. Come on. Come on. All right. And the GeForce RTX 3050. We're going overnight and we're going to pick one up for testing. I'll hopefully have the numbers out. I also have a tournament this week, so it's going to be, I don't know. I'm probably going to perform terribly on Saturday, but we got to get the numbers out for you all. It should be noted that 3D Center made an update to their price purchases. NVIDIA has recently increased prices for its reference design in Europe. This would mean that 3D Center pricing would have to follow, and it would show an even bigger decline. To accommodate this fact, the website is US MSRPs converted into euro with additional VAT included. This market analysis is still only using German and Austrian retailers though. So this may not reflect markets around the world, but it is still the most accurate price trend analysis to date, now marking its 1-year anniversary. So I'll have this, it's linked down below if you guys want to look at it. Obviously, we also have the same report coming from WCCF Tech. I think they note pretty much the exact same sort of movement. Yeah, so the 10%. So let's see. Compared to last month, when the 30 series was retailing for over 80% of the MSRP and the 6000 83%, now these cards are retailing for 77% and 67% over MSRP. These may not be perfect MSRP rates yet. So pretty much like right around there, we're seeing anywhere from a 10 to 20% drop. In about 2 weeks, we should see essentially a bigger drop in GPU pricing. When will this move over to ASICs would be the question. And I think it'll happen fairly quickly on Litecoin, Dogecoin miners. Script miners are going to dump real quick. Do not be purchasing any L3s, L7s, etc. Cadenas are probably going to get really cheap as well as that profitability drops. And then the Bitcoin is an interesting one. I don't think SHA-256 miners are going to experience as much of a dip, and here's why. There were way too many large companies investing into specifically Bitcoin mining. They aren't going to go anywhere. Like Iris Energy is not going to shut down from this. Here's what large farms are going to be doing. They are going to be upgrading. If you take a look at like Bitsby Trippin, for example, basically just getting more power efficient, adding in ASICs, and he's probably the biggest like farm as far as crypto YouTubers go, that sort of thing. And then if we take a look at like the large investment firms, they're going to be just dumping more rigs in to compensate. What do you do as a miner? What should you be doing? Copying this, dumping in more hardware, more assets to compensate, and then waiting until the next bull run, and then you're already set. What did I not do last time? Did I regret? What's the biggest thing that I did personally, right? I got disenchanted, disheartened, I got frustrated, was trying to figure out how to pay the bills, do all that sort of stuff. I never quit my job last time, so this time will be extra interesting, right? But I kind of just stopped, right? Sold off a lot of the GPUs, took a break. Now, I did see it coming the second time, so I got right back in right at the right time. So I did time it correctly, but I did take a break. I should have been accumulating more, right? And I wasn't accumulating more. So that's where I made my mistake. Luckily, I caught it early enough and we recovered. So what do we do this time? We just accumulate more. And that's the way it goes. That is how we function. What are the aspects that are going to prevent you from doing that? Power costs are going to prevent you from doing that. What have we talked about previously for searching for power costs? Find a small town that has some sort of renewable energy that also has some sort of big factory in place with it. Why is that? If it has a big factory in place in the general area, the electric company is a lot less to mess with your commercial rates because they have to basically get that approved not only through the city, but essentially heavily influenced by big industry. So that's really what you're looking for. Things like quarries, manufacturing plants of some sort, whether that be automobile manufacturing. I think there's like Toyota, for example, or whatever it may be. These are the things you're looking for to reduce your power costs. Co-locating, if you just have a couple rigs, find somebody that's going to co-locate it for you. You're going to get slaughtered here. That's the way it's going to be, I think, in general. What I would be expecting personally is another 50%. I would expect even from here, what I would prepare for is a cut of half of your profits out. So For me, for example, that's actually getting pretty scary, right? I mean, we're going to go down to like $95 a day at the current farm. We put everything on Ethereum, and we're doing $191. Our ETH amount is up though, so that's good. So we do have that going for us. So that's kind of what you're looking at there. Let's look at profitability for the day. The RTX 3090, calculate that beast out. $2.10 a day after 23 cents a kilowatt hour. So I was putting this in because that was like what the Californians were telling me they're paying. It's just, that's not going to fly, right? Like if you get down to rates you can get in Texas using the strategies I just mentioned, you literally increase your profit by like over $1 a day. All right. That's the importance. What are we looking at our standard though, so we can compare it? The 1 cent a kilowatt hour, $3.10 a day after, 10 cents a kilowatt hour. Let's go ahead and look at TON real quick. Now TON's running out of days to mine, that sort of thing. And I wouldn't expect the price to maintain super heavily, but you are looking at 4 cents a day more on the RTX 3090. No, you're not. That's incorrect. Excuse me. You're looking at less, $2.70 a day. All right, so let's go ahead and take a look at the 2080 Ti where Flux was performing fantastically. I highly doubt it today, but let's calculate it out. It does say Flux is in the lead at $1.37 a day, but after power, ETH is still above at $1.44 a day because Flux does utilize more power. That's a note that I need to make. I had a ton of people reach out to me and say, hey, I reached out, or I started mining Flux. I moved over from Ethereum and now my rig's rebooting all the time. You know what the number one problem was every single time, at least in my experience so far, is that Flux uses so much more power that once you apply that across like a 12 GPU rig or even a 6 or an 8 GPU rig, you don't have the power supplies to compensate. You're not following the 80% rule anymore. You're cutting it way too close. Upgrade your power supplies before you move to Flux, or at least do the calculations and make sure that you're going to be able to compensate for that. It's not going to blow up right away, although I have heard of one case of that happening on Flux, by the way. Well, at least tripped breakers in a blown power supply, not catching fire, but trip breaker, blown power supply. That has happened to at least one person. Make sure you calculate that power consumption out correctly before you just go into Hive OS and swap it to Flux. All right? Let's be careful here. Not all algorithms are the same. Let's go ahead and check Ethereum profitability today on pools. Mining Pool Hub in first, Crazy Pool in second, and Flex Pool in third. Last 60 days, Mining Pool Hub in first, Crazy Pool in second, and Flex Pool in third. Last 30 days, Crazy Pool in first, Mining Pool Hub in second, and 2 miners in third. Last 21 days, 2 miners in first, Mining Pool Hub in second, Ethermine in third. Last 14 days, 2 miners in first, Crazy Pool in second, and Ethermine in third. Last 7 days, Crazy Pool in first, 2 miners in second, and Ethermine in third. Last 3 days, Crazy Pool in first, 2 miners in second, and Ethermine in third. And for the last day, Crazy Pool in first, 2 miners in second, and Nano Pool in third. Now, we do want to check out, of course, some changes that have been happening. We already kind of talked about Flux, but as you can see, Flux is only down like 0.2 mega solutions a second. If we're looking at the pools, which is inaccurate because on the network, what's only going through is 1.61. I think we're down from 2.5. So a whole mega sol seems to be gone. This is primarily due to all the pools needing to update their nodes. I don't know how long this is going to last. Hopefully I'll get more information for you guys later on. Let's go ahead and look at Ravencoin. Ravencoin is still sitting right around that 5.5 terahash a second. The difficulty is decreasing on Ravencoin though, so that's good. Here's the depressing part Ethereum's still going up in difficulty, which is making it more and more difficult. More and more difficult. Let's go ahead and look at Ergo. Not really any changes. 16 terahash a second on the network. No real difficulty drops in the past week or so. So there you go. All right, I'm going to sit down, do some questions and answers because I'm sure there's a lot going on today. I know a lot of you all were in Red Panda's stream yesterday while this was all going down, so I'm sure a lot of that was already handled. Got some questions answered by him. And wow, 525 years is the most we've had in a long time. So a huge thanks to everybody that's here. Here's how it goes. Once again, my camera's tilted. Whatever. That's about how it works out today. So super chats are first priority because they're the easiest to read. If you have a question directly for me, please do @SonOfATech. It makes it easier to see in the chat, and then I can answer it better. I do have pretty severe restless leg syndrome. I'm trying to get better at that. Part of that is standing up makes it a little bit easier. So let's go ahead and get through this and see what's going on. So Paul Doherty. Oh man, Doherty. Whatever. You said everybody gets it wrong. You need to like message me how to do it, or I need to Google it real bad. But free Flux Minecraft for a day or two. So here's the thing that's insane about Flux, just in general, because people were asking me like, as far as benefits to running on Flux. If you're just looking to run a Minecraft server, it's the cheapest way to run a Minecraft server, other than if you want to like buy a Raspberry Pi for yourself. You're talking about it's 1.05 Flux a month, which is, how much is Flux right now? I think it's only like $2 or something. It's $1.35 a month to run a Minecraft server on Flux. And you're talking about pretty much full redundancy. All the positives you would have from like a traditional VPS. Except for not necessarily like there's no like bare metal access options or anything like that. But if you're just trying to do that, dude, it's awesome. It's so cheap. It's so good. I'm going to probably be moving my TeamSpeak server over there permanently. And then, cause but I'll have to migrate it and see how that functions. So I got to talk to the team cause I need to migrate like whatever settings are over there, that sort of thing. But I'll probably be moving TeamSpeak over to Flux from Vulture. And then I do want to talk to them about what their plans are for like really popular Web 2 apps like WordPress, for example, and moving websites over. Obviously, you can move custom websites over pretty easy. I think obviously one of the big benefits would be things like WordPress, etc. Pay Me in Crypto says, @SonOfATech, if development came back to Rio, would you consider mining it, or are you done with it? I just would be happy to hear from Homeboy again and see that he's doing good, really. I'd like to see him update the miner more than anything. The XMR miner. All right, right now I do want to say, and it's really not financial advice, but as a mining channel, and I've always preached this and I'll continue to preach it, buying crypto is not a thing for me. It just isn't. Maybe trading crypto that I already have is a thing, but I buy hardware, all right? And that's kind of what I do. So buying the dip, not my thing. Why am I pausing on GPUs? Because of why we talked about. GPU pricing is dumping down pretty hard. In 2 weeks, things are going to look a lot different. Eduardo, thank you for the $10 in R, whatever that is. Why is my average hash rate on FlexPool higher than reported? Because I don't get sketchy with my overclocks and I don't use miners that report incorrectly. And it'll always fluctuate and go over and then it'll come back down. It's really whatever work is getting done that's able to get sent back. Part of my issue, though, as well, to be clear, is going to be I'm still on a hotspot, which I need to get that resolved because I'm still waiting, but that'll increase my profits at the end of the day. Little EU miner says, that son of a tech, what are you planning to mine after ETH moves proof of stake? What is your next favorite coin? Flux, hopefully. B. Kelly says, that son of a tech, what will you accumulate during the bear market? Mining hardware, specifically SHA-256 miners is my bet. It's something I've always wanted to get into that I have not been able to get into that I possibly can now. When we talk about mining in general, I still don't like ASICs, but if I'm being completely practical and I can detach myself from the emotional side of things, which I think all of us have a hard time doing, I definitely do as well. That's why the way I'm talking today is like I'm trying to pull all the emotion out of it and just give you guys the most practical knowledge that I have based on previous cycles, etc. If we want to be completely honest about mining cryptocurrency in general, it is very clear that Bitcoin will remain mineable for its entire lifespan. And the reasoning for that is that miners have to vote, right? Miners would have to vote for it to move proof of stake. They're not going to do that. And there's a majority of big institutional investors that have already invested in mining it. So that's your absolute best bet. Now, your investment compared to your return on investment is very low. So the only time an average Joe like myself or y'all or whatever could even fathom really starting to get into mining Bitcoin is at this point for ASICs is during a bear market. So I'm kind of excited for the bear market because I might be able to actually start accumulating some SHA-256 mining equipment. The landscape's going to change as well too. I really hope that at least the strategy from Jack Dorsey's block is to provide home miners with an option to mine Bitcoin more reliably, that sort of thing. Now, if we're talking about why I don't like ASICs, resaleability at a small level, meaning like once the miner's done, it's done. Part of the danger right now, of course, just to be clear, is that we do have low voltage miners in development. We have more powerful miners in development. So all of the hardware that's going to be on the market that you're purchasing now can be obsolete. At least that's what I used to feel like. That being said, a majority of the hash rate on the network is still S9s, and the companies are figuring out, how to make that function. That doesn't mean I recommend buying S9s. It just means that the longevity of the ASICs as far as profitability, while low, right? An S9 maybe makes like 50 cents a day or something, probably 50 cents a day right now after the dump. If you've been accumulating them for forever and you're still running them, then okay. I like having GPU mining as an option for everyone because I think that is a truly decentralized way to handle it because you have consumer availability to hardware that can mine cryptocurrency. And I think that's very important because right now, what's been lost sight of that I always try to pull people back to is those principles of crypto, that financial independence that it was created for. And part of that is part of the idea of decentralization is to make everything accessible to everyone. So I think it was 2 days ago, I was in like the live chat for like Flux, and I said, you really can't get to true decentralization of Web3 until something like Flux is allowing processing power across like cell phones. Because once you have basically once you have a ubiquitous device that allows people to deploy nodes to and that sort of thing, then you have better decentralization. The problem that comes with decentralization that a lot of early investors and early miners don't like is that that is going to tank your profitability in mining or even with your running your nodes. And so it's a hard problem of, if you really truly care about the principles of crypto, then you don't care as much about profitability. And there's a balance in there somewhere. I don't know where that balance is. But that's kind of my perspective across the board. We got a new membership, so thank you for the new membership. Liquidation. Mining King. Vertcoin is super power friendly. It is, you are correct. You have 6 1660 supers on Vert with a core lock at 60 to 65 watts. How do you feel about Vertcoin? Vertcoin's one that did survive the previous bull run cycle and make it into, through the bear market into this one. Is there enough development going on though for it? Has it moved in a direction that really puts it up there with the big dogs? And I don't think it does. And that's really going to be a problem for sustainable GPU mining, right? So Vertcoin really needs to do something. I don't know what it needs to do, but it needs to do something. Because right now I don't feel like it necessarily does anything. I haven't checked the... Yeah, it's still like... Vertcoin's a weird one, right? Because it's old. It doesn't really provide anything. It provides everything to miners, and it doesn't really provide anything outside of that for use cases. I think that's the best way I can articulate it. All right. Ooh, I accidentally clicked the wrong button. Dismas T says, ask Son of a Tech which mining calculator to trust. I don't like, you can utilize a lot of them just to get general information and ideas, but until you're really running it yourself, it's not going to be accurate. Scott Schultz says, ask Son of a Tech, I respect your experience, but are you taking into account taking into account the new? I already did explain exactly that, I think. Which is the institutional investing and the states investing and all of that. I did already discuss that as a possible factor. But I'm also just giving you the absolute bottom barrel, practical, worst case scenario. What does that mean though, too, by the way, right now? I think we will continue to go down through March. One of the things that I did want to bring up is like, if you're mining, to just as soon as I'm getting payouts, I'm pulling out what I need to pay the bills, right? So that's what I'm doing. It's really up to you how you want to handle that. If you want to hodl through this, if you really think it'll come back. I'm not seeing a big rally. Like I said, if we do see basically either a temp recovery, if we see any sort of recovery, I think it'll be between Wednesday and Friday of this week. There will be a video on setting up Minecraft server on Flux. There's already a guide on my Substack. Sloth says, has anyone told you that you resemble Dan Campbell? No, sir, they haven't. J Bain DC2 says, at Son of a Tech, I've just ordered another 6,600 for 459, getting 50% back in SG tokens, hoping to reduce your ROI time by using alternative methods on top of my mining as your personal strategy at the moment. Yeah, you're going to have to move around and, you know, be ready to go. Dismas T says, ask Son of a Tech, which mining calculator? I already answered that. Hasso Tube says, ask Son of a Tech, can you make a how-to video about a Flux node? I don't have enough Flux to do a node. Maybe one day, though. A J Mustang says, ask Son of a Tech, are 10-bit main S9 pluses for 2,000 a good price? I mean, you could... I think it'll get cheaper, right? Miner stat, hardware, ASIC miners, Control F, S9 plus. Or is it just S9, right? Is it the S9? I don't know. Either way, between $1 and $2 a day. So all of those for $10 a day. And if you got 10 of them, that's at 10 cents a kilowatt hour as well. So 2,000, I mean, that's a 200 day ROI, right? Liquidation says, that's Son of a Tech, do you think with the bear market and other overproduction of GPUs at the moment, GPU prices are going to the ground like a reverse effect of inflation we have seen? So I still think like the external factor that we have to take into account is that the chip shortage hasn't gone away. So while you may have a reduced demand for GPUs from the mining perspective, you still have an increased demand for chips for automobiles, etc. I think we'll see a decrease in pricing. We will see limits lifted. We will not see the exact same thing that happened before where you have $75 RX 580. Well, the 580s may go down that cheap again. But I don't think the newer ones will go down that cheap, right? RTX 3000, RX 6000 series, they aren't going to get real cheap. Other than maybe that stupid 6500 XT that nobody wants. David says, what is the solution for all the problems? Buy more ASICs and steal electricity from your neighbors. There you go. I do not condone theft of electricity, just to be clear. I feel like I have to state that. Alan SH says, ask Son of a Tech, last time I saw vendors in Shenzhen giving away miners almost for free. Yeah, I think we'll see some of those go for free, like the L3 pluses, etc. Aha says, at Son of a Tech, don't you worry that Bitcoin and crypto in general is or will become too centralized with all these huge corporations investing in it and mining it. The good news is that we have a lot of them. So if we have a lot of companies, then technically it's still decentralized. The other good note is if they go away, like you can still roll back SHA-256 all the way to CPUs. I mean, I don't really necessarily worried about, so there's centralization of hash power, which could be a problem if it was a single company. Like, let's say we get into the future and it's a Ready Player One thing where, like, what was the name of the company in there? I can't remember, but like, let's say it's like that company and they're searching for the last Bitcoin and they control 100% of the hash power or whatever it is. For consensus, let's just say they own enough for consensus to vote to change the network however they see fit. Then that's when you run into a problem. But if everybody's chasing that last Bitcoin and there are even 10 companies chasing the last Bitcoin, nobody's going to want to change the consensus mechanism to give an advantage to another miner or whatever it may be. I don't see it being a problem. Unless, of course, like we just experience crazy globalization and complete control over everything via some sort of corporation, which is a possibility, right? We're really far off from that, but maybe by the year 2140, sure, which would be like the last mined Bitcoin. And the reason I think like we're really far off from that is we do see a consolidation of IPs and companies going on, right? Like Microsoft pretty much owns all of the good video game IPs ever in existence now, outside of a few from like Sony and whatnot, right? I think you'll start seeing more consolidation like that, but I think that you also will see a huge pushback from the public as well. So take that for what you will, right? The same thing as like Disney consolidating all of the IPs into pretty much under Disney. I don't foresee people just giving in to Facebook and Meta and letting them control a lot. One of the good things is, by the way, just in like recent, is that Microsoft did buy all the IPs and they're going to do their own metaverse. So I don't think the Facebook metaverse is really going to be a big deal. I do think Microsoft has the potential of just completely taking over the metaverse and owning it all because they own all the IP. I do see that happening, especially if they partner with like Disney, and then game over, bro. Game over. Let's see. Peter Dankos says, "Hey bro, what will you say about Chia mining with hard desks? You only have 20 terabytes, small farmer. Chia will be dead by the next bull run." CryptoMan 5000 says, "Later, thanks for streaming, glad to see it." All right, CryptoMan, see you later. Andre Morris says, "At Son of a Tech, do you listen about the Alphium coin?" I did watch the video from Serpent, but I haven't done any personal research on it. I'm JD says, "At Son of a Tech, thoughts on Conceal?" I don't really have many thoughts on Conceal. Hero says, "At Son of a Tech, plot twist. Till next run up, the markets adopts proof of stake and proof of work is went to hell." No, I think Bitcoin's not going anywhere. Emon says, "At Son of a Tech, what price should you look for 1660 supers, 3060 Ti's in near the bear market?" So I think like 1660 supers, I think they're going to tank, right? Like, let's take a look at this. What would a 1660 super do right now? Yeah, there it is. 76 cents a day on Ethereum. For being realistic, let's say 40 cents a day after power on Flux. I think that gets cut in half. Let's just say it makes like 25 cents a day. Right? Let's say that's what it's at. Oh, let's say we want to pay it off in a year. Yeah, I think 1660 supers could start going for as low as $100. They're old. And those might be really good buys at $100. Super Vilsey says, "At Son of a Tech, what would be the best miner for 10 series NVIDIA GPUs and why?" T-Rex for Ethereum, Mini Z for pretty much everything else. Maybe even Ethereum at this point. Mini Z just seems to be the most stable, especially for other altcoins like Flux. Raw B says, "At Son of a Tech, thoughts on Raptorium?" It'll die. I really don't know. I guess I hear that the hash rate's dropping and it'll become more profitable. Hero says, "At son of a tech plot." No, we already read that one, bro. Yeah, the camera's shaking. I gotta get it fixed and stop shaking my legs. Maverick Mining says, "At son of a tech, would it be wise to set up NiceHash for the next couple of months to do auto switching for the most profitable coins?" Probably not. I don't know. So, the problem with utilizing NiceHash is like you give all the benefit to the people that are renting from you. I had somebody reach out just recently and said, you know, I have like half on like NiceHash and half on Ethereum. My NiceHash profits went down significantly, and then my Ethereum went up for the day. Why didn't my NiceHash go up for the day? And it's pretty simple. Like, NiceHash is a marketplace. Like, people are renting from you. So if there's like a huge block on Ethereum and you're mining it through NiceHash, you're still just getting paid whatever they're renting your hardware power from. If you're mining to that pool that finds that big block, then you get a share of that big block. Whereas with NiceHash, the person renting your hash power gets that. Alan SH said, "Why do you think Chia is dead?" Because every CEO board run cryptocurrency dies in bear markets. That's just kind of the way it's been. I don't see him surviving that. They'll move on, get bored. They also are, from the horse's mouth, they feel like they deserve to get paid, compensated outside of just how well their cryptocurrency is doing. Daniel says, from the mining screen running in the background, is that the 6600 running at 29 megahash a second? No, that's, and you can check the review for it. It's the Sapphire G Pro mining specific card, the 060. There is a 6600 back there, but that one's running at like 28 megahash a second. The mining specific version of the 6600 is the G Pro 060, and that gets a little bit more hash. Pay Me in Crypto says, "At son of a tech, even if the merge is delayed again, won't the network be overrun by ASICs and jazz miners?" That's your general feeling. So if the delay happens again, look, I think like ETH is in a spot where it's, damned if you do, damned if you don't. If they delay, like, the public trust is going to go significantly down. And then if they do move to proof of stake, I think, well, obviously from what we can tell, since, the Ethereum Foundation is the primary stakeholder in all of the stake, they've already lost public trust as far as in the proof of stake move. And they're pretty far behind as far as sharding compared to other scalability options that are out there right now. Whether that be in Cardano or Solana. DOT has a limit, I believe. So DOT's probably a little bit more outdated right now. I can't remember. I think they have a limit. Ooh, Peter says, "Wow, bro, Savatech, why do you think Chia will be dead?" I already answered that. Living Our Destiny, at Son of a Tech, have you heard about Conflux going to proof of stake? No, I haven't. I'll try to add that to my list to go research it. Thanks for the info. That's why we stream, I guess, so I can try to catch up on it. Best Buy just had 1660 Ti's this AM available for 300. Crazy overclocks or anything that cause invalid shares, Roman. Junkyard God says, at Son of a Tech, what are the most efficient GPUs to mine ETH? I think it's the A2000s or A4000s. Yeah, A4000s right now. Zyler says, at Son of a Tech, do you think the S19S will remain profitable for a decent amount of time? I can't tell you that. I don't know. Depends on your power cost, really, at the end of the day. Liquidation says, ask Son of a Tech if you could put a number percentage on the general GPU price drop for the near future. For new cards, we go back down to retail pricing, MSRP, probably adjusted MSRP. And, older stuff. 1660 Supers, Polaris. Probably, I would assume probably like up to like a 200% decrease. Somewhere around there. I think you could start seeing like Polaris GPUs for like $75 a pop. I don't know that you would buy them because I don't know what they mine after Ethereum though. Joey says, that Son of a Tech, do you think Raven has a future? Yeah, I do. I think Raven has a future. John Smith, please stop spamming the chat, but I'll answer your question. Why did Flux disappear from What to Mine? Do they think it's a scam? First of all, Flux is still on What to Mine. We've been looking at it here today. Proof right there. It's right there. Here is the Zell hash. Maybe you didn't click it. Is it a scam? No, but it did break yesterday because of a bug in the code, which is not confidence inspiring. And please stop spamming the chat. All right, that's just time out. Everybody take a deep breath, boys. Hero's excited for his first bear market. All right. It's just a timeout. Make sure you guys hit that like button if you enjoy this content. We have about half the amount of likes compared to the amount of viewers. So if you guys don't mind doing that, I am going to call it for today. So be sure to hit the like, comment, subscribe, notification bell so you're notified when videos are released. We are going to be working very, very hard at YouTube because guess what? Here's my strategy. I'll be as transparent as possible. How am I going to compensate for the decreased profits? I'm going to work my butt off on YouTube and hope that I can make YouTube revenue. That's the way it is, okay? Multiple revenue streams is important, and that is the way this functions for me. And so, yes, I am utilizing YouTube to compensate for revenue on the mining side being down. That's how it works. Hopefully, if I continue to provide information to you guys that is helpful, you'll continue to support the channel and we can make it through a bear market together. I'll see you next Tuesday.